Good morning and thanks so much for tuning in. You're watching Ask BQ on BQ Prime. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour of trade. Of course, this show is primarily focused on getting you answers to all of your stock-related questions, and we'll start that in just a short while. But like we do at the start of this program on an ongoing basis, we focus in on one particular stock or a group of stocks. And today the focus understandably is on Tata Consultancy Services because it kickstarts the earnings season for the IT pack. It has been in focus not just because of its earnings, but also the fact that the board will be considering a buyback of shares. And we've done a little bit of a calculation to identify what the extent of this buyback could be. We'll get clarity on that in just a bit. But to line things up, for what you need to do with Tata Consultancy Services, if you're holding it, and whether you should buy it at this juncture. To set the context, Smriti has a few pieces of information that she'd like to share with you. Smriti, over to you.
So yes, you've rightly mentioned that the second quarter earnings begin today, and especially with the biggest IT company, TCS. Looking at the quarter now, it's predicted that the second quarter earnings will remain subdued like the previous couple of quarters. Looking at the estimates, the company is likely to clock a revenue of about 60,353 as compared to 59,300 in the last quarter. And the net profit is expected to rise only 3%. Now, the earnings, even though the earnings will remain subdued, the guidance for the rest of the 6 months will be keenly watched now that the management is going to come and announce it in a few more hours. The second, as you mentioned, is the buyback. Now, this could potentially be the largest buyback. This is the fifth one in a row. And the last one was, I guess, about 18,000 crore. Yes. So now, as per BQ's calculation, the maximum amount of buyback that the company can do today is about 22,620 crores. Looking at that, this will be the fifth one in the last 6 years. The other one is the deal pipeline that will be keenly watched. Now, the company has won 800 million and 1.1 billion deal in the second quarter, but the discretionary spends are still under pressure. So the maximum deal order book that we're expecting is about 11 to 13 billion dollars in the second quarter. Now, recently TCS also asked its employees to come back to office. Now, while this may increase the utilization, it will also increase the overhead costs of the company.
Interesting.
Other than that, the stock has rose to 52-week high on Monday after the board said that it will consider a buyback. And moving on, we have the share prices currently hovering at around 3646.
Right. Fantastic. So that kind of sets the context for the conversation. Let's get our experts in. We've got Vijay Chopra, who's the MD and CEO of Enoch Ventures, as well as Ajit Mishra, who's SVP Research at Religare Broking. I believe that we're still waiting for Vijay to join in, if I'm not mistaken. So let's get a technical view on Tata Consultancy Services first. Ajit, thanks so much for taking the time. What are you seeing on the charts right now for TCS?
Good morning, Alex. As you were just sharing the numbers, if you see the entire 34. IT pack, in fact, was underperforming, for quite some time, almost like 1.5 year kind of a consolidation that we had in TCS after making a new record high in January 2022. But interestingly, now we are seeing that, despite the underperformance of the Nasdaq Composite, which is a tech-heavy index, which we closely watch for clues, we've been outperforming for the last couple of months. So the IT index, the IT counter, especially the IT majors, TCS, Infosys, HCL Tech, they all are doing well. And now, just before the earning announcement, we feel that upside seems capped, considering that we have already seen decent move in last 4-5 weeks. So short term, yes, I feel that there could be a bit of a consolidation around the current levels and maybe closer to around 37.50 could be the area where it might take a breather. But now we have a higher base also. 35.50 is a zone basically which it should hold. So keeping that in mind, short term, it might consolidate with a positive bias. But if you are a medium to long term investor, definitely it's an very sweet spot wherein after such a prolonged consolidation, we are seeing the reversal in the IT pack.
Okay, interesting. So I believe that we've had a little bit of an issue getting Mr. Chopra on to the program, but we're just getting him right now. In the meanwhile, why don't you share with us, Ajit, your view on the Nifty 50 as well as on the Bank Nifty? What are the key levels that you're looking for? And today, of course, is expiry for Bank Nifty as well.
So yes, Alex, in fact, if you talk about the index, is a kind of a roller coaster ride that we've been witnessing in markets for almost 2 months now, that from 19,200 to a new record high around 20,200. And then we've almost, retraced that lower band again around 19,300. We made a low. After hovering or witnessing a seesaw move in last 4-5 trading session, we are finally getting some bit of stability. This index Nifty 50 has finally reclaimed the short-term averages, that is 20 EMA, and now we are seeing the follow-up move. The best part about this move, Alex, is that the underperformer, especially the majors like HDFC Bank, Reliance, ITC, HUL, they are also contributing to this move. So indications are in the favor that this rebound should extend and maybe closer to around 20,000, 20,050 is the area where it might retest. And in case if there will be any profit taking, 19,600 to 650 would be the area of support. So any dip around, let's say, 19,750 is a zone where one can look for initiating longs with for the position target of around 20,000 levels in the near future. Banking index, since we have the weekly expiry, and but still, despite this event, banking is anyways underperforming. So though we are seeing bit of a recovery in HDFC and the other private banking majors like Kotak, which were underperforming earlier, we still have multiple resistance to cross. So for banking, we feel that until we cross and sustain 44,700, I doubt there will be any meaningful recovery. So it could be the other sectors like, as we were discussing about the IT majors, they are contributing to the move. Then we have, from the FMCG majors and realty counters, they have done exceptionally well. So banking, yes, in the next leg maybe can contribute. But as of now, for today, I expect this muted move to continue. And for the short-term trading perspective, one should book profit in case if you are holding longs in the banking index, especially for the intraday also. And let this index stabilize above 44,700 for fresh longs.
Fair point. All right. So that's the view on both the benchmark as well as on the banking index. I believe we've got Vijay Chopra on the program. Vijay, thanks so much for taking the time. We have been discussing Tata Consultancy Services, and we were waiting for your view on the fundamentals before we kickstart the query segment. So we've kind of set the context to talk about the key watchables, but what, according to you, should the investor who's holding Tata Consultancy do? And should you look at buying at this juncture?
A couple of things, Alex. I think that TCS is a great company to have in the portfolio. This is a portfolio stock. And I know people who are holding TCS since 20 years, and they'll keep on holding for the next 20. Because they trust the way TCS has rewarded them over a period of time. So one, that it has moved up quite well, and there's a buyback in place. The IT companies have started rolling out their results, and it's around the corner. So I think that this again would be a kind of a muted quarter for them. I'm not expecting any fireworks or any major announcements that they would make. Yes, they have reduced their bench strength. They have consolidated operations. They have brought down the costs, which is good for any company for that matter. Now the question is, how many new clients would they add, and how many new big clients would they add? Because small ones they keep on adding and they keep on getting deleted. But again, how many big orders or big clients or big things which we would witness is a question. So I think that IT would take a couple of more quarters before it actually starts flying, because this has been post-COVID. It has been a challenging years for the IT companies. And especially post-war and the inflation issue, the IT spends have gone down considerably in the US markets and in the European markets. But again, Indian behemoths have seen a lot of troughs and, ups and downs. So they would definitely, they are bellwethers, so they'll come back very sharply. So my sense is that you should keep TCS who are holding, they should keep. Number two, people who want to get afresh into the stock, I would recommend get into a an Infosys or an HCL Tech rather than TCS because it has moved up quite well. So Infosys looks better than TCS as of now on the charts. But yes, long-term players, no need to worry, keep on holding.
All right, let's start taking a few questions now. The first question we have is from Jay Prakash Soni, and he's asking about Oracle Financial Services Software. Now, the stock has given about 29% returns in the last 6 months, and he has bought about 400 shares at 4,200 per share as the price.
So apologies, I'm going to step in here because this is a 4,200 call which he has taken at 139.25, and he's requesting a view on the charts. I'll come to you on this question based on the technicals. Ajit, what should he do with this one?
So Alex, though it's not very liquid, option to deal with, and though as we were seeing recovery across the IT majors, so that's why we are seeing participation here too. And I would rather recommend to stick with the quality names, especially the top IT names when it comes to the option trading, especially in the FNO segment. And for Oracle, I feel that it's quoting at 121, this 4,200 call. So it's prudent that you should switch to HCL Tech. It could be in one of the alternative, which looks comparatively better to us. 1250 call, which is quoting around 35, can be considered for fresh long and with stop at 30 and for the target of 45.
All right. Apologies for the error first. Next up, we have a question from Netra, and she's talking about IIFL Finance. Now, the stock in the last 6 months has given gains of 37% and is on a down move today, though. She wants to know if this is a good time to continue holding the stock. So, Ajit, first we'll come to you, and then Vijay will take up fundamental check on the IIFL Finance.
So IIFL, anyways, it's doing well. The stock has been hovering around the record highs. There's hardly any consolidation also. The trend, the volume pattern, everything looks positive. So I feel that you should continue to hold. In fact, considering the last consolidation, there's a possibility that we see this stock, inching towards 455, 460 in the near future. 655, 660 in the near future. So that should be your immediate target area if the view is short term, and your stop should be at 620 in the meanwhile.
Vijay, what is your view on the fundamentals for IIFL?
Well, the stock has moved up. Again, these are such markets where you should keep on booking profits. So anybody who has bought at a lower level should definitely think of, shifting somewhere else. So there are a lot of opportunities on the lower side. I think that, defense stocks would do very well. You can look at selective IT stocks. I think that even selective pharma stocks won't be a bad idea because the kind of strength we have seen in the dollar, all the companies which export do very well. So I think that, anybody who has bought at a lower level should keep on booking profits. At the most, I see IIFL going to 650, 660. And in this rally, I don't see, from here, that it would go, very much higher because it has already moved up close to 40%. So again, in a correction, I would recommend to buy, but again, fresh buying, absolute no. People who are holding should keep on exiting on every upside.
In the context of the TCS buyback, I think this is a question that is not related to a particular stock, Vijay, but Rashida is asking, why are companies offering share buybacks and not giving bonuses instead, since both are corporate actions, and how does it benefit them? My understanding of this is that a buyback is looked at as a way of distributing wealth to a certain number of investors, and this has been beneficial from the tax perspective. Correct me if I'm wrong, Vijay.
Well, yes, it is tax efficient. Number one, there are 2-3 ways to look at it. One, if the company has cash on books, so what should it do with the cash? One, that they can dole out dividends. That's the simplest thing to do. But again, if the company has confidence in its operations, so generally companies doing buyback, it gives a lot of confidence to the investor community that this company is here to stay and there is something good in store. That's why the management has thought of buying back. So the management thinks that the stock would go up definitely, and they would be, the government can slowly keep on increasing their stake. Definitely tax is one angle. And yes, people who participate in buybacks, they definitely get a higher price the money in some way comes back to the investor. So I think that it's a win-win for both the management and the existing shareholders. And definitely, I think that it is tax efficient for the company, and this shows renewed confidence that the company thinks that the future is very bright. Otherwise, there are promoters who are offloading their stakes in such markets. So the markets have touched new highs. I saw a report where it says that promoters have offloaded a lot of their own stake, but here we see the reverse. So this means that TCS is very confident of its future. So this is a good news actually.
All right. Next, we have a question on two real estate stocks. Now, the index has hit a 15-year high yesterday. And the question is from Mr. Rajesh Maheshwari. He wants to know a short to medium-term view on Godrej and DLF stocks, and should he switch from Godrej to DLF at this juncture? Ajit, let's take a view from you first.
So both these stocks are doing well. In fact, if you see the IT index is trading, trading at the record highs, and DLF is currently at the forefront. It's trading largely in sync with the index. Now we are seeing catch-up move in the other realty counters like Oberoi Realty, Prestige, Shobha, and Godrej Property, just to name few. So I feel that if the view is short term, then definitely you may think about booking profit in DLF and shifting to Godrej Property, because we still have room. Because talking about Godrej Property, the high was close to around 2,500 last year, and we are still away around 20-30% from the record highs. So it gives us room. Plus, we have a recent consolidation in Godrej Property, which gives us the comfort of having a better risk reward ratio at the current levels. So yes, you can switch if the view is short term. 1600 should be a stop, positional stop for the Godrej Property, and as we have discussed about 2500 being the major positional target. Intermediate could be closer to around 2200. It might take a breather.
All right. Now we'll soon know about the company's second quarter performance. But Vijay, is it a good time to shift from Godrej to DLF based on the fundamentals?
Well, I think that apple to apple comparison, DLF has moved up quite a bit from the lows which we saw, in the month of March, almost 350. It has gone up to almost 570, and Godrej, for that matter, it has also moved up from there, almost 1800. So apple to apple comparison, DLF is a better company to be in as of now, because it has much larger projects, much grander projects. And definitely one thing I've seen with DLF is that they've never reduced their prices irrespective of how the market looks like. Look at Camellias in Gurgaon. They have never reduced the price. So they have always got a premium to the product they are offering. So I think that apple to apple comparison, DLF looks much better in both the companies. But yes, I think that south-based companies like Brigade, like Prestige, these are great companies to be in. Even Oberoi Realty, we saw some kind of a dip, but Oberoi Realty can definitely come up. There are smaller builders like Rustomjee in Bombay which do a very good job. So Rustomjee also looks very good on the chart. So real estate, for that matter, overall, I am fairly bullish for this festive season. I was going through a report which said that the inventories are down abysmally, and the real estate players have been able to sell or hive off most of its inventories, which is good news for real estate, because a lot of money which was blocked has now come on the balance sheets. So this would propel more projects, more development, and definitely good news for the balance sheets of all the good builders. So again, DLF I love because, again, I'm a Delhiite, so I've seen DLF growing from scratch all the years of my life. And I think that DLF is going to do a stupendous job in Delhi NCR and definitely in other parts of the country.
Interesting. We were wondering this in the newsroom just a short while back. What is prompting the kind of sales that we're seeing in the real estate space? Because we were looking at updates, Vijay, from Purvankara, for example, that was talking about over 100% increase in sales value in the second quarter year on year. And we were thinking, are people booking profits in the equity market and putting some money into real estate, because interest rates are at close to 9%? But then I guess that's a chat for another day. We've got a clarification that is sought from Rashida, and I asked you that question on buyback and the reason for a buyback. What she's saying is, that why buyback and not bonus? In buyback, only a few shareholders get benefits, whereas in a bonus share issue, everybody gets benefits. Do you have a view on that, Vijay?
Well, as I said earlier, that it is definitely the stockholders, the existing shareholders are getting benefited. But again, as I said earlier, whenever I see a buyback in a company, it renews my confidence in the management and the functioning of the company. So for sure, TCS is confident of the way forward. They've seen a rough patch in their journey for about a couple of years. But I think that the IT behemoths and all these, that's why we call them bellwethers, because they've seen all kind of weathers. So I think that TCS is a great portfolio stock, not to be sold. People are holding and they'll keep on holding. And for the ones who trade, I think that Infosys HCL gave a better opportunity.
All right. Next up, we have a question from Akshay, and he wants a short-term view on IndusStar. Now, IndusStar is currently trading at 199 and has given about 37% returns in the last 6 months. So, Ajit, let's first come to you. What are the charts showing on IndusStar?
So Simti, it's been an underperforming journey since ages. In fact, we have had these kind of recoveries every now and then in the stock, but it's usually fizzle out. And so we feel that this rebound should be considered as a shorting opportunity, means opportunity to exit in case if you're holding. Because if you talk about the performance since 2017, the stock has been witnessing this negative trend. And in case if somebody invested in this money in some other stock, they may have made decent amount of money. So underperformers, this rally which we are seeing in the mid cap and small cap space, plus the large cap majors also, you should consider this to exit the underperformers from your portfolio and look at the better names which are trading in sync with the market. So for IndusStar, it's a recommendation to exit, and fresh buying one should definitely avoid.
Gentlemen, quick views. This is something that I toss to the experts on the show at the end of the show. What are your top picks? Obviously, fundamental, this is slightly longer term in nature, but I'll come to you first on the technicals, Ajit.
So at present, we are seeing that participation is broad-based, but since we are seeing volatility in between, the couple of names which are looking very consistent. One is Havells, which is currently quoting at 1395. So one can look at Havells after this consolidation, which you have seen after retesting the record highs, the marginal consolidation that we are seeing from the last 4 or 5 weeks. We feel that 1360 should be a stop, considering the kind of base that we have formed on the daily chart. And in the next swing, we are eyeing a newer high. So maybe close to around 1460, 1470 should be the immediate target, let's say in a week or two. Apart from Havells, Bharti Airtel, which have been consistently holding the positive tone. In fact, there was hardly any participation on the downside. In fact, in the recent correction also, and we have a fresh breakout on the daily chart. So Bharti Airtel with stop at 935. One can look at fresh buying even at the current levels with 975, 980 as a positional target.
Okay. Any top picks that you would like to share, Vijay?
Yeah, so I have few stocks on my radar. I think that Tata Elxsi is one of the stocks which I like at these levels, almost 7,400. I think that once it starts moving up, and this is medium term to long term, don't expect things to happen tomorrow. So 7,400 is what Tata Elxsi is trading at. I think that you can easily do 8,000. So Tata Elxsi one. Secondly, there's a small company called Ugar Sugar, which I like. Presently trading at about 107, 108. I think that due to the ethanol story and the blending, which is going to increase, the sugar companies are going to be hugely benefited. And so I think that sugar should be there in the portfolios. Another good stock company is the topmost in the paper space. It is JK Paper, presently trading at around 400. I think that JK Paper has the potential to go up to easily go up to about 500, and so keep on holding. JK Paper is a fantastic company. There's a golden crossover also on the charts. And finally, I think that SBI card, it has corrected quite a bit. So the kind of credit card transactions, online transactions are increasing, and with the backing of SBI, I think SBI card should do well. And it can definitely inch up and give a 10 to 15% return.
All right. So there are the stock picks. That's all the time we have for today. Thank you so much, gentlemen, for taking the time out and joining us and answering all the questions. And viewers, thanks a lot for tuning in. We'll be back tomorrow, same time at 11:30 a.m. Until then, lots more coming up at BQ Prime.